Hey, what is going on, team? And welcome back to another edition of the Ask Maddie Show. We do the show each and every Wednesday, in addition to our Monday show after hours, to provide you guys a lot of value, show you guys a little bit about what we offer at cryptocharge.com. Really, this is just the tip of the iceberg. Over on our website with code YouTube, you guys can access all of this for 30 days free, plus 50% off any membership. Live updates Monday through Friday. We're going to be doing on Wednesdays, fundamental overviews. We have our coin library, which is freshly updated with written analysis, entries, exits, buy limits, DCA tolerances. We have our education center, learning center, where you guys can look at quick start resources for charting, all that good stuff, as well as our Discord community. So $49 a month plus 30 days free. With code YouTube, you guys don't pop that in, you're going to get no trial and pay $99 a month. So, give yourself the opportunity to check it out for 30 days free. You guys brought a lot of good questions here. We have, some big topics we're going to talk about today. Midnight, GRT, XDC. You guys asked a very good question about AXL, and then we're going to do a comparison between a few of our smaller cap assets that we talk about frequently, and which one's potentially the best pick. So we're going to be going over that together. Big announcement though, and I'm going to remind you guys again at the end of the show, we are having Michael Stoyer back on the show Monday for our after hours show for an update on the Cspr network. So make sure you guys tune in for that, and I'd appreciate it if you guys have questions for Michael, drop them in the comments below, and if we find one or two of them they're good, we might bring them on stream. Don't ask us about price. We're here to talk about the fundamentals of the network, specifically with this interview, because there's absolutely no point in discussing price with that. Obviously, on our live shows, and here is a great place to do that. So let's start with our first question from Simon Davies, 9659. What do you guys think of Midnight? So Midnight's very recently launched. Some of you guys have probably had a little bit of this on your radar or paid attention to this because there was an airdrop. If there was a few different assets you could hold, and as long as you either participated in the by hooking up to the toolbox or being on a certain exchange, you were able to get the airdrop of some Midnight tokens. So although this is not a Cardano-based asset, it is very similar to a lot of the value that you could syndicate from the Cardano environment, but it is not a layer 2, it is a layer 1 token. And what they're primarily focused on is going to be decentralized applications, but deciding how much of that information you do share, whether we're talking about healthcare or finance, while still being able to verify that data. We're going to take a look at the actual website here in a second. But of course, coinmarketcap.com, we want to always look at those quick stats here. Market cap at 1.3 billion doesn't put us on like the super small cap side of things. It's sitting at number 57 right now. So, I would say it's kind of middle of the pack, almost like kind of small to mid, more towards the mid side of things. We have a cap supply of 24 billion. That's not getting any bigger. And circulating supply is 16.6. So that's a pretty healthy ratio. That's one of the things I always want you guys to look at. If there is a great disparity in circulating versus total, and especially if total is something that inflates constantly, we want to know how much could potentially come on market. Now, this is leaving a very small amount of tokens, and of course you guys can go on the website and review the white paper. There's a quick link right here, always for the white paper, to see what that vesting schedule looks like, see if there's any serious big unlocks that might be happening in 3, 6, 9 months from now that might put you in a position that's unfavorable. So on their website here, they actually have a pretty good layout, and I like these types of layouts on websites that like get down to the nitty gritty. Obviously, you want to make sure that we're speaking in language to everyday investors that makes sense, but not leaving out those important data oriented components. And we don't do that here. And I do like that about just a quick view of the site here. So one of the main things is you see here, proof without exposure. Utilize recursive ZK snarks to separate the proof from the data. And this is a topic that you guys have probably been seeing for a while. Ethereum and a lot of Ethereum-based assets are employing ZK rollups, ZK snarks. It also probably sounds familiar because Zcash uses the ZK snark methodology to create both finality, verifiability, as well as privacy. The difference here is that we're not trying to be this all-in privacy solution. It's more about choosing which pieces of sensitive data to share and are relevant to the party requesting the data, and if they're permission to receive that data, whether it's KYC'd or, like I said, healthcare. Are we violating any sort of HIPAA violations by sharing certain pieces of information? This allows you to confirm and verify identity, authenticity, without sharing those sensitive details, or only sharing the sensitive details that are relevant, right? Imagine if you go to the store, you really, at the end of the day, don't need to know how old I am if I want to buy some alcohol. You just need to know that I am at least 21 years old. Doesn't matter if I'm 21 or if I'm 99. It's a binary yes or no. And that's what we're talking about, a lot of these instances here where we're able to maintain the privacy of the data without giving up the verification side of things. So this is a proof of stake methodology, and that's really most of the assets we're actually talking about today. You guys requested here almost all of these are a proof of stake model. And that's something I think that a lot of people, don't quite understand when we're looking at the DLT space, is they think that, proof of stake is this inferior model and proof of work is the only decentralized methodology. But at the end of the day, we're still talking about putting up a meaningful amount of capital. In most instances, that will be slashed if you want to be a bad actor, go offline, double sign transactions, all that stuff. So proof of stake, for the most part, I think is going to be one of the most used consensus mechanisms over these next several years. Of course, I'm a very big fan of DAGs, Hashgraph model, and others that have high throughput, but proof of stake offers a lot of flexibility with that. So there's a lot of other information here that you guys can check out, but these are kind of the main things that I wanted to give you guys as far as the top down there. Let's go ahead and take a look here at the chart, and this is going to be a very, very limited chart. It is just going to be night. USD is going to be the ticker here. We have a few listings, and we can come down to a very small time frame. Let's come down to the 4 hour here, and you guys can see that even though it's a new asset, my team is curious about it, so it's something I have been bringing on stream. And you guys can see here, even though it's been limited data, this is drawings that we've had since our last session, and it is still holding to some extent to be true. Now again, 4 hour chart, do I put a lot of weight on this? Absolutely not. And of course, we don't offer any financial advice here or on our website. But when we look at just the more immediate price action in here, and I see these tops in here from December, again, mid-December, we break out, we back test, and it looks like we're holding the floor here. This most recent test here on January 6th offered a pretty decent floor of support. So if we can maintain above 7 cents, night actually remains in a relatively bullish setup here as a whole. In fact, when you look at the more immediate using the swing high, swing low here, 15 cents or so could be our next big area of interest in here. So there might even be a nice swing trade opportunity in here for almost a 90% gain. Now, I want you guys to remember, again, you look at that on the daily, that's a very limited amount of data. So when you find new projects that you like, if you're like, Matt, I love the fundamentals on this, I did the research, I read, through the tokenomics, it all looks good to me. I feel like I understand this and it's going to be a good exposure in my portfolio. This is more of a DCA opportunity. So you're either going to DCA slowly on a daily schedule. We teach you on the website the consistent investor strategy, how to do that, and how you want to employ that. Maybe you have some limits as well, but DCA on a daily basis, chipping away a little bit, whatever that budget looks like for you, is going to be the better way to build one of these positions. Once it starts to take off, that's when you stop doing the DCA and you switch to limit-based ordering if you want to continue to add to the position. So 7 cents is kind of our short-term area of interest in here. Again, not a ton of data. There is a relatively large gap. If we were to see a drop below that, it's going to open up the 6 and then 5.4 cent region if that were to not hold here at 7 cents. But right now, whole market looks relatively stable. Like to see that. Kevin Brown, 3042, GRT, please. So this is going to be the graph, and this has been around for a while. I have this brought up on our technical tune-up Friday segments on Fridays on cryptocharge.com quite frequently, and it's something that I've definitely charted quite a few times. And it's a little bit of an older asset. I even remember, I think it was Captain Bitcoin or something wrote this dumb rap song and talked about GRT and a couple other tokens in there. It always comes to my mind when I hear GRT. Market cap, relatively small, right? We're now kind of that sub $500 million region, getting close to some of the other small caps that we talk about quite frequently. Still almost top 100 as far as market cap ranking. So again, still relatively high in the overall hierarchy of everything else. I want you guys to remember too that there's a relatively large disparity between even like top 10 and top 15 and even the mid pack of the market as far as valuation goes, and how dramatically that valuation can change when the market does get moving and we see rotations and dominance drops and all that good stuff. With GRT, 500 million, I would say that's, again, bordering on the small cap side of things. We do not have a max supply here. So that is something that we always want to be aware of and look into why that is. It's generally because there's some sort of inflationary mechanism. It's not a terrible thing, right? We have Ethereum has inflation, Cspr has inflation, API3 has inflation. There's lots of assets that have natural inflation into their tokenomics. It's not a bad thing, especially if there is, something to counteract that or something that counterbalances or offers something in return of that inflationary aspect. Circulating supply is 10.6 billion right now, so relatively large as far as the amount of circulating supply. Again, indexing is going to be the main thing that GRT is offering here. So think about querying, the Google of blockchain. That's really what GRT is getting after here. And obviously they have a lot of other tools that you guys can, implement into your applications. This is really for kind of like a decentralized querying for applications, but at a very high level. So think about how ChatGPT and other AI tech works, where it's constantly syndicating and building these libraries and then pulling from those libraries and, utilizing the deep learning of those libraries to be able to optimize those and be able to provide the information quicker. As you've seen, there's been multiple iterations of ChatGPT, Grok, whatever you guys like to use out there, Copilot. And really, it's going to be that continued evolution as those applications become a lot more demanding, and we need to become a lot more not only quick with it, but we need to have a good level of verifiability with it. Not, hey, ChatGPT kind of gets things wrong. We need to continue to be better at that. So indexing and querying is going to be the number one thing that GRT offers as far as value. Stream data, of course, as well. Token data, so API pulls, and then Web3 framework. And this really is, the hypergraph is going to probably encompass the other three concepts in here as well. Let's take a look here at the chart here, guys. And I do not own GRT. I'm just giving you guys the quick little synopsis here. Based on what we talk about today, guys, if any of these really pique your interest and enough of you guys are like, hey, we really want to see a full 15-20 minute breakdown on XYZ asset, let me know. I can't justify though doing that if it's only a couple of you guys in the comments saying, yeah, we like GRT or we like Midnight or whatever it is. We can do a deep dive if you guys have that curiosity. Now let's take a look here at GRT. Like I said, we have a lot of price action here, so we don't have to do as much guessing, and it's been obviously a nasty cascade as of recent. Now there's lots of other high quality assets out there that I think have really gotten unfairly beat up. I'm coming down to the 5-day chart here, so each one of these candles is worth 5 days worth of price action, just so you guys are aware of the gravity of what we're looking at here. We had initial launch here in 2020. I'm using the aggregated chart here. So initial launch in 2020, you guys know that I don't really put a lot of weight on those just because those are illiquid. They're not really a good example of, fair market value. You launched just the right time, right? So we saw 21 top come in and then came in 2021 all the way down. It's unfortunate when that happens, right? When you have maybe a great product idea, right? There's nothing wrong with this concept. There's nothing wrong with the overall project mission. In fact, I think it's a very important but less sexy component in the overall DLT ecosystem. And you just get this crazy cascade in here that just offers minus 99, whatever this is, 98% down. And that's true of so many assets that launch just at the wrong time because they're trying to get their stuff launched while things are hot. No one knows when that bull market's actually going to end. We finally saw this corrective move come in here, obviously through 22. One thing that we did see here was a full rebalancing. So we had these levels in here. We did a little back test in here, but that was strong confirmation back here in March of 24. This is why I want to show you guys setups like this. And let's say that this price action in here had not occurred yet, and we see that we're building some sort of floor of support down in these regions in here. I want you to consider these gaps as high value gaps because it is very likely, even if more downtrend is going to ensue, like we're seeing right now with GRT, that the imbalance is going to be filled before more downside action. It's the more reasonable thing for price to do. So this is still from right now confirmed downtrend, bearish price action. We do need to reclaim this 5.6 cent level. That's going to be the key level. Next level is going to be 7.7. If we can recover above 7.7, that's where we start to really kind of be able to look at some bigger gaps here, closer to 16 cents and then maybe even 31 cents respectively as those next big areas of interest. So we still need to see roughly a 2x to recover back into those levels, which honestly in crypto can happen in a day or two. And from there to top of range, about 5x, 2x there, and then the 3x there. So there might be some good swing trade opportunities in here, but we are stuck below major short-term MAs, 50-day right now, 100-day, 50-week hasn't been tested in a while, 200-week hasn't been tested at all. So there are definitely some pressures on the bearish side of things. Bears certainly have control right now, but recovery above 7.6 does set you up to potentially get involved in some swing trades that can make you some good money in here. But there isn't a major imbalance like we talked about. It has been resolved already. You guys should cover XDC. Oh my gosh, I feel like I've heard XDC for the last 4 years, something like that, 3 years. And I know a lot of people hold it. A lot of buddies of mine who follow Kevin Gage are part of his group, and a lot of people in our group, they're really big on XDC. I just really try to be very focused with my portfolio. I'm pretty particular about adding a new token, especially now that I have a pretty nice spread across the board of different verticals that I'm attacking. I really want to make sure if I'm going to add something that I'm not doubling up and that I'm using those extra dollars, or if I'm going to be essentially thinning out or taking away from my existing budget of what I could add to my portfolio, to open a new position. It's just difficult to get involved in each and every one. Now, market cap wise, we are sitting under $1 billion right now. So still, again, mid pack as far as what we're looking at with top 100, top 150, sitting at number 68 right now. We do not have a max supply for XDC, and circulating is going to be 19 billion. So again, always check out the vesting schedule, see what that means for you. Do not get caught off guard. XDC is primarily focused on open source, secure smart contracts, decentralized network, as pretty much all proof of stake models are. And it's going to be a hybrid proof of stake. So it's going to be delegated proof of stake, which essentially creates for sub 2-second settlement in most cases, and a much higher efficiency because of that hybrid model. Now, when you have those hybrid models, you're going to have people nitpick at it, because if you have the purity standpoint or the maxi standpoint of POW becoming the absolute end all be all of decentralization and everything else is just vaporwave garbage, you're going to have a hard time wrapping your head around why a hybrid model is very important. We even see with the Midnight model that we talked about towards the top of the show here, even though it's proof of stake, there's still a 2 token system there that offers a little bit of balance to the ecosystem. And that's something that we're going to have to get used to. There is going to have to be balancing points that are tested, pushed, and adjusted as needs change, as the market changes. And it's just a reality of it. So XDC is, I think overall market cap wise is kind of getting into that more lucrative area of interest. I'm still big on a lot of much smaller caps right now because they offer much greater upside. Let's take a look here at the chart here for XDC. Let's go ahead and take a look at the technical analysis. We're gonna take a look here at spot crypto. Again, you guys can see, like, I'm not running my mouth here. I really do chart a ton of stuff that I do not hold and I have never held because this is really the bread and butter of what you guys should be doing here. You guys can take your charting to absolutely anything, whether you own it or not. Crypto, Forex, stock market, these skills are 100% transferable across the board. Is there more volatility in crypto? Yes. Are there less gaps because it doesn't close? Yes. That will change as the stock market becomes fully tokenized 24/7. We'll get there when we get there. Let's take a look at this chart here though, and let's mark up some just key levels. So overall structure-wise, XDC is honestly really strong because you look at the 22 lows in here and the 24 lows in here, nowhere near those. You look at the next major levels in here, we've had some pretty good breaks of the accumulative structure. Right now, we're actually in a relatively healthy spot. The magenta line there represents the 200-week moving average, so it's aggregating the last 200 weeks of data and then giving us the average price of that. That's all these MAs mean, by the way, guys, and you guys can set up these MAs however you want. I'll show you how to do this on our website. You can set them up on hourly periods, daily periods, whatever. And they'll give you a good indication of, are we trending above or below short or mid-time indicators of all those average prices over whatever that period was. So 200 week here is being recovered. We are trying to back test the 50-day here, not quite fully locked in. We've obviously had a couple down days here since, that big pop in Bitcoin, which is nice to see. Anywhere in here is a good spot to hold. I would say that if there was a break of current level and that wasn't a hold, I'd be looking at 5 cents. And then 3.6 cents respectively. But even in all those scenarios, you're actually still making a higher low here in XDC, and we're sitting just under a $1 billion market cap right now. So those are the main levels in there. Are there any major imbalances to the upside? Not really. Nothing that I'm watching for here. That's an imbalance to the upside. And then you guys see in here as well, that's going to be our next major level. So back above 6 opens up, 9 to 10 cents. So again, that could be a good swing trade opportunity, but that's what confirms it there. Again, defending long-term MA right now, challenging short-term MAs. We've got a couple short to mid-term MAs that we need to recover above for that confirmation, but 6 cents is going to be that magic number you guys are going to be watching for there. Let's take all this away and let's look at a couple fib ranges. So we do have, of course, ultimate high, ultimate low. I also like this range in here from 23 because there's a very clear bottom. You guys can see the impulses in there. I think this actually gives us a pretty good picture of where XDC is at on a more mid-term outlook. So from the 9.3 cent high to the 2.1 low, 200 week being held there. That also coincides with the 382 that's being held. We're below the 50%, which coincides pretty closely with that level we want to see recovered for confirmed short-term bullishness to the upside. 1.618 was perfectly smacked here. Nice rejection from there. We see 20, 27, and 32 cents as those next big areas of interest. So from current market to next areas, 3x to maybe a 5x. So not as big as some of the other ROIs we've talked about there, but let's also take a look here at our bigger range here, the 21 high and the 22 low. That sets us up for something closer to the 30 cent, 47 cent, and then the 65 to 70 cent region up there. And that would also tee us up for this actually being a 786 retracement back here in January. When you see people talk about fibs and they're talking about all these retracement levels, the reason we watch for those key levels at top there, the 618, 702, 786, 702 is not a real fib number. Blockchain backers, one of the bigger people that coined it out there, and I think it's very helpful because it kind of is just a middle ground between 618 and 786. Those are the levels if you're going to be a short trader or if you're going to try to capitalize on a retracement from those levels, that's where short traders are going to start getting involved. They might layer in at 618, add to 702, and then set their stop loss above 786. So in this case, as a short seller, you would have maybe been a little early to the trade, but if your stop was above the 786, you would have been in a good spot to overall benefit from this downtrend. Now, if we're able to get back above this macro 236 around 6 cents, you guys can see that opens up to the 236 there as our new floor of support and opens up those next areas of interest. So let's go ahead and just measure those out one more time. So that puts us closer to a 5x and then a 13 to 14x on the upside of things. Last thing we'll do here, guys, this is called a Fibonacci cluster, swing high, swing low in here. What we can do is look for overlap in here and see if there's any values that are really close together that say, you know what, this is like a relatively important area of interest in here. So although this is the previous high in here, this coincides with the short-term 2.618. So 20 cents is an area of interest. We see 28 to 32 cents, and then the 60 to 65 cent area up there is an area of confluence. So you guys can take those three numbers and say, okay, if I'm maybe going to do some target making, I know that these three blocks are areas where I'd maybe like to take multi-step exits. So the next one is from Jerry Glentz 749. How about AXL? It seems parallel to what happened at Casper. And really good question. And I think this opens us up to a very important discussion. And you know what, maybe we'll even bring this up on the interview with Stoyer on Monday when it comes to talk about Casper network updates. So when we have decentralized networks, a lot of people have this assumption that holding the tokens gives you equity in the network. And to some extent, it's kind of true. But let's remember what we've learned over the years, especially in the SEC v Ripple Labs case, SEC v Library, SEC v Coinbase, right? And we're talking about the sale of unregistered securities. When we have a security, what that really means is that there is a common enterprise that is, essentially investing our money on our behalf and for a common enterprise to benefit as a whole. That's not what we have here in the DLT space. We have decentralized networks, and there's a lot of different ways that they can happen. Like, as we just discussed, proof of work, proof of stake, hash graphs, DAG, hybrid models. There's a million ways consensus can take place. And those associations can offer grants. They can, look at a lot of different ways for token distribution. As you guys know, airdrops, have to appropriate some for the team that's doing a bunch of dev work. And, who knows if the network is going to be a long-term success. So that is a little bit of a gamble for them. You have to appropriate for that a little bit. Treasury management. There's a lot of little things that we have to appropriate when we're looking at tokenomics, even when we're talking about a decentralized association. Now, what happened with Axelar or AXL is we had Circle come in and buy essentially some of the IP that was being worked on by the dev team and acquired a good chunk of the dev team. But that is not the association. Let's be very clear about that. The association in itself still sits in place. It is still a nonprofit organization. Your AXL tokens still operate the way that you intended them to operate from the get-go, and you still have the same value, not dollar value, but you still have the same value on the network that you did previously prior to the acquisition of some of this IP and some of the core dev team that people were looking at as like, oh, this is what will make the project super successful. Unfortunately, you have to remove that expectation in DLT and crypto investing. You absolutely have to. And I know it's not fair. It's not fair. And that's the reality of it. You are not investing in a company. This is not a company. You are not a shareholder. This is not a stock. This is a decentralized network. And if you choose to invest or hold some of the commodities or the gas tokens or tokens that represent governance or other things on the network, understand that that does not give you equity in the network itself. What we're banking on in any scenario, Bitcoin, Ethereum, XRP, Solana, it does not matter what it is that there will be an increase in overall volume of application building, institutional use. And in turn, that creates more demand for the tokens because gas is used in those applications. That is the main thing that we need to consider here. So let's tie this back to Casper really quick. So obviously, two things happened in Casper that caused big price decreases, and most of them are retail, not understanding what DLT is, what crypto is, and or even as a whole, like the difference between for-profit and associations. You had Casper Labs, which was a for-profit company and was getting some, dev grants from Casper Association, the nonprofit. Casper Labs, unfortunately, did 100% mislead us on, a little bit of the, overall mission statement of what they were trying to do, trying to maybe make themselves a little bit bigger than they were. I have zero respect for the team. Let me be clear about that. That's now Prove AI, but they've built over on Hedera. Now, they returned those tokens that were given to them as, essentially research or grant tokens, and those were returned to the association upon departing and deciding that they don't want to build on Casper anymore. And those fears were long gone, right? Those are things that we don't have to be concerned about anymore. We also saw a network freeze because there was a glitch in the network, and we had to go back, freeze to make sure no value was stolen. It was resumed, but because the other previous news happened, followed by that news just shortly after, paired with some bad price action in the market as a whole, we saw some really unnecessary selling, retail panic, all that good stuff. So if you think about it, it's actually more the other way around in this situation where you had, yes, confusion about for-profit versus association, but this is more about the power or the overall focus of the network for Casper Network being returned to a decentralized focus and association focus. Whereas I think a lot of people are concerned that because of this acquisition of some of the IP and core dev team of Axelar, probably butchering this, that you're not going to be able to, ever see a successful decentralized ecosystem. So I have not kept up with this project. Obviously, this question required me to do a little bit of research to understand what exactly has been happening here. This is something I have brought on stream a few times because it's been asked about. But understand that this doesn't mean the network is going down or that your tokens aren't worth anything or that this can't recover in a bullish scenario. Those are the components, though, that I need you guys to look at when you're ready and invested. Do not just, get attached to names and sound bites because you will be misled. Let's go ahead and take a look here at the AXL chart, and then we've got one more question, and we're going to close out the show today. So obviously crazy selling in here. You're not going to have people too excited about that, especially when there's, not very good information or good transition of information. I think there's a lot of examples of that. I think that a lot of dev people are just terrible communicators, and that's why we leave them behind the computer and we don't let them talk. And it's also why it's difficult to find a good CTO, Chief Technology Officer, because you have to have both that deep technical knowledge as well as the ability to portray that in a digestible way to the everyday audience. Unfortunately, marketing and PR for a lot of DLT solutions is not great. Again, this is just nature of the beast. It is part of the environment. With Axelar, we actually had a really good floor support in here that was being built prior to all this crazy shit that happened in here. So obviously October 10, you have that crazy sell-off in there. That wasn't a wick that I would consider a legitimate wick because this is only on the aggregated chart, but we ended up filling that wick anyway later on with price action that have full candle body fills in there. So that is legitimate price action. New lows were set in here just recently at the end of the year. Obviously, end of the year, we saw a lot of stuff selling off. You have a long way to go before you're back in super comfortable territory here for AXL. And I don't know what it's going to take fundamentally to turn around the sentiment around this project. Something, for holders that makes them feel like there's long-term value or reason to continue to be invested in the network. But there is roughly a 250 to almost 400% move that's required to get back into this area of interest. And then you also need to recover above that 40-cent area of interest. So it's not just, hey, we get back up in here and we're good to go. We need to see the break over and then more testing. Otherwise, this is just breakdown, retest, and then more downside action. 50-day moving average, big wet blanket in here, right? This has been also kind of like our trouble with Cspr as of recent. The 50-day has been really sour in here. When we look at the market cap, we're looking at 85 million. That's very small. We're talking about API3, Velo, and Casper territory as far as market capitalization right now. It could be one of those hero moves where you guys are able to maybe get a really amazing return if you're willing to, catch a falling knife and see what happens in here. But it's up to you guys to make sure that you're staying on top of your research. And it's also why I over and over again implore you guys not to be overly diversified so you're able to keep up with the news and know what's happening with your projects. We're going to move on to our last question here. Mike 1603, ask Maddie, Velo, API3, or Casper? So these are three that I talk about quite frequently. They're all in my portfolio, all three, and they all are small capitalization tokens. So let's go ahead and take a look at what those three capitalizations are. Let's go ahead and go first with Casper, just so we can take a look here on CoinMarketCap. So we got 67 million is current market cap for Casper. It's very small, under 100 million, very small. We also have API3, which is going to fall in that same category, 40 million, so even smaller than Casper, and then we also have Velo, which is going to be 136 million. So in order of market capitalization, meaning which ones are going to require less money to move than others, it's going to go API3, Casper, and then Velo requiring the most amount of money to make a proportional multiple move. Now, let's consider a couple other things here as well. They're not all attacking the same problem. In fact, they're attacking three different problems. So you're not even, you wouldn't even be oversaturated if you decided to be adding to all three of these or two out of three of these. There's no overlap here, and they're all small capitalization. I will again warn you guys with small capitalization coins, the upside's great, but remember that also comes with downside action. You're going to see more intense volatility to the downside when that action occurs. You can't have it both ways, all right? Can't have your cake and eat it too. Casper focused on upgradable smart contracts, proof of stake network, predictable gas fees, nice upgrades to the network recently, sits middle of the pack as far as market cap is concerned. We have API3, which is a decentralized first-party Oracle ERC20 token, so syndicates its main value from the Ethereum network. Again, it's very, very small market cap. We're talking about sub 50 million right now. So let's say we wanted to get a 10x out of this. We need well under $1 billion to get a 10x out of API3, where we need well over $1 billion to get a 10x out of, let's say, Casper. And then we also look at Velo, which is more focused on institutional finance, decentralized finance, that kind of stuff. And Velo syndicates most of its value from the XLM or Stellar network, although it also is a ERC20 native asset, and you can do EVMs and all that bridging with it. Let's take a quick look at the charts here, guys. Maybe we do a little quick little triple panel here and do a little side by side. So in panel 1, we will go Casper. In panel 2, we will go API3. And in panel 3, we will go Velo. We're going to close those down, and I'm just going to tidy these up so they all match. You guys can see up here that you sometimes will have, if you don't have it synced up, which I don't like to sync, that they will be different time frames. So make sure you guys are looking at that before you're doing the comparison, so you're not, so you are comparing apples to apples. Sometimes you have to do adjustments, to make it all fit, but you want to try to be as close as possible so that you're, understand you're looking at the same time frames here. And let's also go take the Velo chart here to the weekly. And obviously, all of these are in less than favorable spots, other than maybe Velo that has the most structural strength here. And let's start here though with Casper on the left side. So Casper, let's go ahead and just tidy this up a little bit here. I'll drag them over as needed. So with Casper here, guys, it's obviously not been fun, and I gave you guys a pretty good narrative as to why a lot of this like crazy selling happening here. Sitting at the market cap we're at now, it really is a very small market cap. One thing that we're noticing here with Casper is there was this double bottom here in October of 24 and then March of 25. We are below that right now. 50-day, 100-day has been a pretty big wet blanket for us, difficulty getting over that. But getting back above 7 really does open up this entire pocket here between 1.6 and 2.5 cents. So there's roughly like 120 to 250% moves that could happen in between here. And we saw that happen both in November and in April. Above 2.4 here for Casper really opens up really liquid pockets in here towards 5 cents, 11 cents, and 22 cents. I still believe that Casper is going to hit at least 22 cents before we see altcoins go in for like a tremendous bear market. So from current market, that is going to be putting us somewhere around that 22 cent mark. Is almost a 50x from current market. Now, let me be clear about this, because I guess a lot of you guys can't read, or you guys don't have titles on, or you live in another country. I don't know. This is not financial advice. I have never in my life called a bottom. Never in my life would suggest this is the dead bottom and invest every last one of your dollars. I show you guys exactly what's happening on the charts, how I'm approaching it. And if you guys feel that that's an appropriate action that you want to take as well, get after it. But you guys are adults. I'm not your dad, okay? I'm here to teach you guys what the charts are showing us, tell you guys about the fundamentals, why I like stuff, why I don't like stuff, and it's still up to you to make an educated decision. If we get back above 0.007, which from current market is about a 60% move, we are in very friendly territory that opens up multiple exits to the upside. So I wouldn't squander the opportunity if you guys are curious about it. There is staking that's offering 15, 16% natively in the pool, helping you offset some of that inflation. It's paid out every 2 hours. It's amazing to be able to lower your average on stuff like this. So it's not for everybody, but if you are curious about a small cap, you want something that is addressing upgradable smart contracts, solid proof of stake, much faster block time, newly added minting feature, burning feature for all fees paid. We have some good things going on with Casper Network. I'm very excited for Story to come on the show next week and talk to you guys a little bit more about that. Now let's move on to API3 here, which also is offering very aggressive staking right now. It's in the 30s or 40s. At one point it was in the 50s. I haven't checked it recently. It is a very, very dynamic pool because it's based on participation rate, and they have a very aggressive participation target. With API3, we did see some crazy breakdowns in here. We did see that full rebalancing. I took advantage of this. I know that you guys look at some of the charts that are down and you're like, man, you just invest in stuff that just goes straight down. I also will lighten my bags when I see appropriate. And in fact, I recovered a good chunk of my overall API3 investment by selling into that here. And then I have been basically reinvesting on the way down from $1 and sub $1. API3 is not far at all from recovering its previous floor in here, which is 51 cents. We're sitting just a few pennies below that, just like we talked about with Casper, and it's even smaller feat to have. Above 51 opens up $1 and then it opens up 224. huge gaps in here, right? So that's 122% to that next gap, and then upwards of 136 to that next gap. So of course, depending on what Bitcoin's going to do, talked a lot on the show about what that potentially could look like. But with API3, I still believe that there are good short-term and long-term opportunities. Even if we're looking at the more recent crashing structure in here, assuming that low is in, we're still looking somewhere between 8, 12, 17, $20 as those areas of interest. 16 is the first area of interest using the more macro range, but that's like a 15x, just the $8 mark. And that's not even asking for a new high here in API3. Again, you guys saw sub $50 million market cap. Do with that as you will. Finally, we'll take a look here at Velo. Now, Velo has the most structural integrity compared to all of these small caps out there. You look at the support that's being held in here. We didn't deviate below that support level. In fact, I expect us maybe come a little bit lower there on Velo. This whole region in here is very safe. There is, of course, work to do. I'm not going to pretend that there isn't. You guys can see here that there is still work to do. Above that 0.008 is where we start to really flourish and we start to see some overall better opportunity in the market. And then I like that there's imbalance up here as well. You look at these candles that were formed here on this weekly chart here, and again, weekly, so lots and lots of candles in here. You also have a little bit of this in here, not necessarily the weight of the world, but this is an area of interest that we have for short-term swing trade opportunities. So when we look at the overall structure here, Velo is the strongest 100%. We look at current market to, let's say, even that previous 7-cent top, 7 or 8x, up into the final imbalance is almost a 35x. So there are different multiples here across the board. All of them are offering very good multiples, and they're achievable multiples because of market capitalization. You'll have people out here that will willingly say, oh, XRP this cycle to $200, to $150, whatever it is. And they look at market cap and like, well, market cap doesn't matter. It absolutely does. It absolutely does. These multiples are actually a lot more realistic because of the amount of money that's in the market right now. So if you are a person that's like, Matt, I don't care about all the fundamentals, out of the three, which has the most structural integrity, which one has the most momentum, which one is in the strongest spot, that's 100% going to be Velo. Second up is going to be API3 because we are a smaller distance from recovering our double bottom in there. It's going to be just a few percent versus that 60% that's in Cspr. And then, of course, Cspr has one of the largest multiples up into its previous tops in there, even bigger than Velo's when we look at that previous imbalance or those previous double tops in there. So best ROI is going to be Cspr. Velo is going to be one of the more structurally strong ones, and then API3 is going to be a very, very good return as well, especially when you can bake in some of those staking. So which one would I pick right now? It depends on what you have in your portfolio. I think a lot of people are oversaturated with payment plays, so Velo might be a little bit of doubling up on that. If you already own Chainlink or another Oracle, API3 also might be doubling up on that. I don't think a lot of people have the upgradable smart contract play in their portfolio, so I'd probably say Cspr in here because it has bigger upside. But again, you need to pick a scenario, especially if you're trying to decide between these three, that you are personally comfortable with based on your risk appetite. I know this was a relatively long show today. I hope you guys enjoyed it. We are going to be, again, back on Monday, like I said, with Michael Stoyer to talk Casper network updates. Drop those questions below for Stoyer. If you guys don't have any questions for him, drop questions for me. We'll be addressing those on Wednesday. Next week, tomorrow, we're doing TikTok Live, so come join us for that. We're going to be taking a look at the markets, taking live requests, answering questions you guys have, and of course, guys, cryptocharge.com. Code YouTube gets you guys 30 days free. And that's not, hey, we'll charge you $1. I literally don't even check your card. You guys can sandbag me. I don't care. I'd rather you guys take 30 days, check out the entire platform, see if it's a good fit for you, get in the Discord, ask questions, see what we're like in there, see if it's even a good community for you, because it might not be, right? You might be someone who's looking for meme coins and quick trades. That's not us, right? We want to give you guys that opportunity to see if it's a good fit. So Code YouTube gets you guys that access plus 50% off. Otherwise, guys, I'll see you on tomorrow as well as Monday. Have a good day.